Hey everybody, my name is Brendan from astounding.com, and today I want to talk about Palantir Stock, ticker symbol PLTR. I'm going to first go into Google and talk about how Palantir Stock is down over 13% in about a month. And then we're going to go into the most recent earnings report to talk about the earnings release, and then we're going to go into the trading charts to see if there's a level or two to buy Palantir if we want to buy Palantir. So now let's get started. So here we are in Google, and here's a 1 week view of Palantir stock charts here, and we can see that in about a month, Palantir has dropped over 13% of its value, and for the past couple of weeks, it's been in a pretty well-defined downtrend. However, if we look at today, we can see that after the company reported earnings, we jumped up 10%. And if we look down at the news here, we actually see some mixed reactions from the journalists. We see that some articles have a really bullish tone, like this one emphasizing the pretty good nearly 50% year-over-year revenue growth, but we also see some articles here emphasizing the increased net loss here. Some of these articles are also talking about Palantir accepting Bitcoin and putting it on its balance sheet, but I think that that is just more of a public relations publicity thing that doesn't really affect the stock price at all. So we'll focus on the earnings report in this video, which we will shift to now, and this here in this tab is Palantir's most recent earnings report for the quarter ending on March 31st, 2021. Here we can see that year over year, total revenues here, which is this line on the earnings report, has increased nicely year over year. As promised, this is about a 50% increase year over year. However, note how they do not give a quarter over quarter view, they only give a year over year view. That kind of immediately got me a little suspicious, which made me look at last quarter's earnings report, which is this tab here, again 2020, and we see that the revenues for that quarter was 322 million USD. So last quarter we made 322 million USD, and in this quarter we made 340 million USD. So again, yes, while we are growing by 50% year over year, keep in mind that that is just one way to look at the data. Oftentimes people do like to see quarter over quarter growth as well to see how the business is doing over the course of the year. For me, I want to pay attention to this quarter over quarter growth for high growth names like Neo, like Fastly, or like Palantir. So long story short, yes, we are growing 50% year over year, but quarter over quarter, we are only growing about 6.5%. That's definitely something that investors should consider, and honestly, something that Palantir should be putting on this earnings report, because to me, it just raises questions on why Palantir doesn't show quarter over quarter numbers when almost every other company shows it in their earnings report. But moving on here, and something that actually looks pretty good is the profit margins. We see Palantir increasing profit margins, or the amount of money that they are able to capture from this total revenues here after counting in the cost of revenues here to get the gross profit. We see that this profit margin is increasing about 7 absolute percentage points from last year to this year, from 71% last year to 78% this year. And that is what I like to see. By raising revenues here, but lowering the cost of revenues, we are able to capture more of the gross profit, and that's showing efficiency in the business, which is what I like to see in companies that I'm thinking about investing in. But now, moving on to the operating expenses block here, we can see that this is where the analysts and journalists are having some concerns about Palantir. We see that year over year, total operating expenses here are growing pretty substantially from 235 million to 381 million, which is an increase of about 61%, pushing our loss from operations, which is this line on earnings report here, up again around 61% year over year. So yes, Palantir is growing. So in order to feed that growth, Palantir needs to spend money. But look where we're actually spending money if we look into the detailed view of the operating expenses here. We see that we are spending most of our money in general and administrative, more than doubling year over year, as well as sales and marketing. If we look, we're only increasing our research and development spending by about 30% year over year. Again, I'm fine with spending money on general and administrative, but if you're pouring that much money into sales, general and administrative, in my point of view, you should be also pouring about that much money into research and development as well, because this is where you invest in your business. You invest in your product when you invest in research and development. So what I would like to see is Palantir increasing spending on research and development and less spending, or at least a slowing down of spending, on this Facebook ad budget or on the CEO sushi dinner and trips to Disney World budget. And if we look, all that spending on Mickey Mouse and California rolls trickles down here to the net loss, where we are growing our net loss pretty substantially by more than double the year over year. However, if I can just stay on the earnings report for a few more seconds, take a look at the incredible amount of new shares that we have issued year over year. This is more than doubling our float of existing shares. This is definitely not what you want to see as a shareholder in Palantir, because this means that the share that you own, your small piece of the company that you paid for, is now worth less because now there are more pieces in the pie now. This means that your claim to the small piece of the company's profits are now less because there's just more people with claims. So actually, this leads to an interesting point here if we look at the cash flows, which I pulled up in this tab over here. We can see if we look at the total adjusted free cash flow here, we can see that we're actually positive on the free cash flow by about $150 million. So technically on paper, Palantir is raking in about $150 million. Well, you may say, how can that be if Brandon just told me that we're doubling our net loss to about $120 million in this part of the earnings report here? So if we look at where this $150 million number comes from, we can see that it actually comes from this $116 million number. And this $116 million is coming from this $116 million number up here, from the adjusted income loss from operations. So if we look into the more detailed view of this block here, we can see that our loss from operations, which is obviously negative, which I've said before, but then we see this additional stock-based compensation here, which adds to our free cash flow. Basically, this is probably the company adding back in the money that they don't have to pay for their employees. Basically, the employees are getting paid not in dollars, but they are getting paid in new share issuances, which is what is causing our dilution here. Again, not quite what I want to see in companies that I'm investing in because of the dilution factor, but that allows Palantir to save on some capital, which hopefully they invest in something useful and not in trips to Disney World. So with all that said, now let's head on over to the trading charts to see if there's a level or two to buy Palantir if we want to buy Palantir. So here we are in Palantir's trading charts, and we can see that we've been pretty volatile. The move today was more than 10% from lows to highs. We can see that we've really been in a pretty well-defined downtrend here ever since late April and early May. But we did bounce up today, and that begs the question, is the downtrend over? And the answer to that, of course, is that nobody knows. But if we look at our top of the candle here, that matches up exactly at the bottom of this candle here from our inflation scare back in early March. Technical analyst people would say that that is no coincidence, and I would tend to agree with them. It appears that this $20 level has acted as support in the past for this candle here particularly, and the tops of these candles up here. And this is often the case when you see big round numbers like $20 or $50, or in Coinbase's case $300, as this plays into market psychology a bit. So the next few days will definitely be telling for Palantir. Only time will tell if we are able to break through this $20 resistance level in order to get to the bottoms of these candles over here around the 2150s, or these candles up here around the $24 level. However, there is always a chance that Palantir gets rejected from this $20 level, and for that, we could see the bottoms of this candle from today around the $16 to $17 support level here. So if we break upwards from this $20 resistance level here, then I could see a short-term trade being possible. However, to me, it is a little bit risky. So if an investor bought in at the $20 level here, you have about a 7% upside to the 2150s, but you have a 20% upside to the $24 level up here. However, if we break down from this $20 resistance level and get rejected, then we also have about a 10 to 15% downside risk to the $16 to $17 support level. So just doing some back of the math envelope probabilities here, buying at the middle of the range at this $20 level is about a 50-50 chance of being profitable, and that's a fair game. And I do not like to play fair games for investing, or especially for setting myself up for short-term trades. I want to play a game where I have the advantage to make money. I want at least 80-20 odds if I'm risking my money. So that's why I would be waiting to get a better idea of where Palantir will end up before putting money into the game. Taking a look at the MACD and RSI here, if we zoom in, we can see that our blue line is underneath our orange line here. What that means is that our short-term momentum, which is the blue line, is weaker than our long-term momentum, which is the orange line. So because of that, we could still see some more downside risk to the stock. Also, if we look at the RSI here, this is the relative strength index, and we can see that it just peaked its head into the oversold territory, which may have caused some algorithms to buy the dip. Again, I do like Palantir as a long-term play. Palantir does look like it has the ability to change the future as it is in the data and data analytics field. And I've said this before and I'll say it again, data is the new oil, and that is where the growth will be coming for the next few years. But for short-term investors, there may be some turbulence because there are a lot of traders in the name. As always, you need to come to your own conclusions, use your own judgment on whether the company is worth the risk. So that was my review on Palantir stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.